Welcome everyone to NAREP West Broward's webinar. Today we are presenting Understanding the CARES Act and Benefits to Realtors. My name is Brian Landman and I'm the Education Chair for NAREP West Broward. We are very fortunate to have Navi Miraj as our panelist on today's call. We are waiting for Richard Garcia, but we appreciate all of your time and respect your time. So we're going to go ahead and start if Richard can jump on. He has an emergency, but he's going to try and get on here. Navi has 15 years of combined experience in the banking and accounting industries, working for companies such as Wells Fargo, JP Morgan Chase, and Deloitte. And he's going to help guide us through this webinar today. And I'm going to introduce Richard in case he can jump on. And Richard has been with City National Bank since 2016 as a vice president and team leader for business banking. And they have originated over $2 billion already in SBA PPP loans. So they're doing a lot of good work for the community. Navi, would you like to introduce yourself?
Yes, thank you, Brian. First, let me just say that, I appreciate the opportunity to be on the call with everyone today. And thanks to you again, Brian, for moderating it and, to NAREP to hosting it. As Brian noted, yes, I am a CPA. However, I'm not your stereotypical tax professional. And so what I mean by that is I only market to real estate agents and brokers. And I chose to do so after presenting workshops at various brokerages. And I really realized that real estate professionals are very much an underserved market. So, how I typically help my clients is by providing proactive tax planning to potentially save them thousands in taxes each year. What I refer to as outsourced CFO services, which is basically taking over their bookkeeping and payroll responsibilities. And of course, the more stereotypical service, which is your tax prep. But, the purpose of this call is not really to chat about that stuff, but more so, I've spent hours, if not days, sifting through the CARES Act and how it specifically impacts real estate professionals. And so, again, I'm just happy to be here and help everyone get through these challenging times ahead.
Yeah, absolutely. Thank you again for your time. And Navi, we appreciate you doing your homework and becoming really a subject matter expert on these PPP and EIDL loans. But why don't you go ahead and tell us what the different types of programs are available under the CARES Act, specifically for realtors?
Sure. So, there's a lot in the CARES Act, but, the purpose of this call is, to have it from the perspective of a realtor, right? So let me kind of unpack the two programs that are specific to you guys. So there are two programs available, PPP, which stands for Paycheck Protection Program, and EIDL, you might hear me refer to it as EIDL, which stands for Emergency Injury Disaster Loan. Now, at a high level, both of these programs are, technically loans, but they have a forgiveness attribute to them. And therefore, if you receive funds from these programs, you may not have to pay the money back. So, I'm typically very conservative. I don't like to use the term free money, but this might be the one exception in the history where this could technically be free money. So for PPP, as the name implies, the paycheck is the first word in PPP, right? So it's focused on keeping employees on payroll. And as a result, the loan amount you apply for revolves around quote unquote payroll cost. And, forgive me, but I'm going to use a little bit of accounting language here, but, I need you to understand this to kind of lay the foundation of the call. But, if you are a realtor or a real estate agent or a broker even, you fall into two major buckets from a tax perspective. So you are either taxed as a sole proprietor, and that's if you're, completing a Schedule C on your individual tax return, or you're taxed as an S corporation. Now, you qualify for PPP regardless of how you are taxed, but the calculation for determining just how much you can apply for is different based on those two different types of tax classifications. All right, so that's, in sum, that's PPP, it's based on payroll costs, and yes, you qualify. Now, the other program, again, I'll refer to it as EIDL, has the word loan in it. but this is basically, there's a grant element to it. So you may have heard that there's up to a $10,000 advance built into the EIDL program. And the advance is actually treated as a grant, as I said. And so, based on the SBA's language, not mine, the grant does not have to be repaid. Now, everything we talk about today, Brian, it's kind of fluid, right? The CARES Act came out a few weeks ago. There's been developments almost every day. And so even just yesterday, I got an email from the SBA that says, well, the way that 10K advance is going to work, it's up to 10,000, and it's 1,000 per employee. So, as a realtor, if you're an S corporation, you typically have one employee, which is yourself. And if you are a Schedule C sole proprietor, you yourself are the employer and the employee.
Fantastic. Thank you for that description. We see Richard jumping on here. So, Richard, thank you so much for joining us.
No problem.
Thank you, man. I appreciate your time. We gave you a little intro there and a shout out, so thanks for coming on. And we just went through, what the programs available are, and obviously, you guys are doing these loans. What's the number that you guys are doing right now?
We're at about 6,000 applications. 6,000 today. We're funding about 1,500 of the 6,000 applications. So we're already in the funding phase. It's taking some time because the SBA hadn't issued a promissory note till last Friday, I believe. So the promissory note is standard for all PPP programs. But it's been a challenge because we have to open up the accounts. We have to get BSA clearance. We have to get all the information in reference to, KYC requirements for the bank. But today we're funding about 20% of our applications, and I think we'll be pretty much done by the end of the week with our 6,000 apps.
Awesome. And where can we get, as consumers, where can we get information for the programs that are available? What's the best source for that information?
The SBA directly has a list of items that related to the PPP. You could go into, www.sba.gov, and there's a whole bunch of tabs there that you could kind of scroll down. It also gives you the eligible and ineligible businesses. Obviously, there's the 1099 that was rolled out April 14th, which we're not very fluid on, to be quite honest with you, because most of our clients are enterprise entities with numerous employees that are on a W-2 schedule. And then there's also the other program that recently was rolled out, which is that Main Street program, which we've been talking about internally, but we really don't have enough guidance to really, steer people going the right direction. But the SBA, there's a whole bunch of websites. You could even go into citynationalbank.com. We have some information on the PPP program as well, and some guidance there with the SOP. So, there's numerous places where people can go and obtain this information.
Great. And Navi, I know that your website also has a ton of FAQs and information.
Yeah, that's correct. This is going to sound a little biased, but I echo what Richard said, that you can get the information off the SBA's website directly. However, what will sometimes be challenging is that you're going to sift through that language, but you really want to just pull out what relates to a realtor, right? So, I've created a web page. You can find it at navimirajcpa.com. And so I've got over 25 frequently asked questions there, and not just obviously the questions, but detailed answer. And I think you might find that a little easier read because it's written from the perspective of an agent or a realtor.
Awesome. And from an accounting point of view, what should we be doing, Navi, or avoiding now in business to help maximize not only the loan amount, but the forgiveness amount? So you said free money. I don't think that there's anything that we're going to end up paying for it. So we might as well take advantage if we can and get the greatest benefit. So what can we do? Or maybe there's nothing from an accounting point of view, and then Richard will jump in and tell us what we can do from an application point of view.
Sure. So, let's dissect that. Let's do maximize first. So to maximize the amount you receive, you need to ensure you're including all of your, and I'll do it again, the air quotes, payroll costs, because that's really what the CARES Act is defining as the loan amount you can apply for. And I won't be able to jump into the finer details here, But again, if you're taxed as an S corporation, what would be included in your payroll costs would be the salary that you pay yourself up to $100,000, as well as employer contributions to healthcare and retirement. And so some of you are probably like, hey, I'm a realtor. Yeah, I have an S corporation, but I'm not this big company. But you yourself are an employee of your S corp, right? And for some of you, your business may be paying for your healthcare costs, or maybe you did a solo 401k, and so the business is contributing to your 401k. And so it's
Right.
not limited to just your salary. You have a couple other things you can add to that number to go into the calculation. For you sole proprietors, yes, there's still an opportunity for you to not just put your net earnings in there, but also if your business is paying health insurance and there's retirement plans that you've done as a sole proprietor, that also can be added to the calculation. So that's the maximizing the loan amount. In terms of maximizing the forgiveness, and Richard, you let me know if you disagree or you can add on to this, but it's kind of similar. You need to ensure that you're using the loan proceeds that you receive for the qualified purposes in the CARES Act, right? So most of the guidance, honestly, the detailed guidance on the forgiveness part have not really been released yet, but I would say at a minimum, be prepared to show that you've maintained salary levels in your S corporation. So let's say you paid yourself $50,000 in 2019, make sure you continue to do so in 2020. Don't reduce your payroll costs in Q2 and Q3 of 2020. Make sure you use the funds to pay for payroll. You can also use the funds for mortgage interest payments, so not principal, interest payments, rent payments, and utility payments for the 8-week period following the disbursements of your loan proceeds. And so, your average realtor doesn't have those additional costs, but for the brokers that might be on the call, yes, you can use, interest and rent and utilities as part of the loan proceeds.
And what about hiring back? Sorry, Richard, what about hiring back employees here? Maybe that's a question more for Richard, but let's say you had 3 employees before and now it's just you. Do you have to hire back a certain percentage of those people to get that forgiveness?
So I want to kind of reemphasize what Navi said, because I have a document here that's very helpful. So what constitutes a payroll cost? Employee benefits such as vacation, parental, family, medical, sick leave, separation or dismissal, payments or provisions of group health care benefits, insurance premiums, retirement benefits, state and local tax compensation as well. So if you have employees that are on unemployment, there is a state component, tax component involved in that you could add back. And obviously any employee that has a salary in excess of 100, not total compensation with benefits, but just a base salary over 100, you're going to be capped at 100. What can the loan be used for? So there are specifics, for example, mortgages, rent payments, and utilities that were established on or before February 15th of 2020 will constitute that 25% that Navi was referring to. So the way you forgive this loan is you have to deploy the capital in 8 weeks. If you deployed 100% on payroll cost, then you'll be forgiven. With the component that your number of full-time staff doesn't decrease, that you can rehire individuals on or before June 30th of 2020, but the levels cannot change from February to April of 2020. And then also the employee headcount, right? Oh, and also the 25% of the payroll, 75% of the proceeds need to go to payroll. 25 could go to what Navi had mentioned, which is payroll, interest on mortgage obligations, rent, and utilities. It's very important that, now keep in mind, if let's say, it's a 75-25 split, right? If you end up doing a 50-50 split, it's not that it won't be forgiven. You're just going to have a loan on that 25% for 24 months at 1%. That's, it's non-guaranteed. There's no PG or there's no recourse, really. I mean, the recourse is the federal government, but at the end of the day, the loan, you'll be paying the bank back but there is no recourse per se. So it is a very attractive, I don't know why people wouldn't be participating. As of this morning, we got confirmation from the bank that the government has already issued $250 billion out of the $350 billion allotted for this program. So that means that that banks have already obtained $250 billion worth of SBA loan numbers. There's only $100 billion left in the PPP program. So definitely, time is of the essence. We feel that by the end of this week, things are going to dry out. Chase had done already, I think it was 30,000 applications in 2 days. They started on Friday. As of yesterday, they already had $39 billion in the program. So, I mean, Wells Fargo, they uplifted their $10 billion cap, so they're going to eat up a good chunk of the chain. So there's a lot of banks participating in the program, but the money will run out. And let me just clarify that all you really need is an SBA loan number. Once you have the SBA loan number, then the bank has the guarantee from the federal government that that loan is going to be SBA guaranteed. The banks still have to do their due diligence and make sure that the information that's being provided by either the institute, the corporation, or the sole proprietor, et cetera, it's validated when it comes to the application and the request. It has to make sense. I'll tell you, I've seen clients that have put that their annual revenue is 200,000, but their biweekly payroll is 15 grand. That number doesn't add up, right? So obviously, be very careful. Reach out to your CPA, and they'll be able to help out, or your payroll company, and they'll be able to help out with the number. ADP, just to allude, ADP made a big mistake. That they corrected. Well, they didn't correct, but they admitted to it that they were including FICA and Social Security expenses within the payroll loan amount, within the payroll cost. And it's just very important. FICA and Social Security are not included. This pertains more to W-2, not so much for 1099, because you pay taxes from at a filing perspective. But if you use ADP, or ADP Total Source, reach out to your representative or reach out to ADP so they could give you the right number. FICA and Social Security are not included as payroll costs.
Is it one bank you have to apply through one if you get a loan number through one, or could you be duplicating the applications that hurt you?
So I will tell you, you could go out and apply with 10 banks. What ends up happening is once a bank assigns an SBA loan number, that's it. That bank owns that loan. Unless you request from that bank that you withdraw the application. So, for example, we've had a lot of new clients because Wells and Chase, unfortunately, last Friday, they kind of closed the faucet, and there was a sense of desperation. So, out of the 6,000 clients that we have, can you guys hear me fine?
Yeah.
Yes.
Okay. Out of the 6,000 clients, I would say 40% of those applications are brand new clients that are coming from other organizations. The downfall is that most banks are going to use this as an opportunity to capture new business and capture new relationships. So, for example, City National Bank, we will participate in the program for a non-bank customer, assuming that bank customer will become a solid full relationship for our organization. So most banks are requesting that. And so it's very important, there are brokers that will help you get this application submitted, that under this program, they're called agents. Agents do qualify to earn a commission if the banks are willing to pay for it. Now, the downfall is you're not going to be able to select the bank or the relationship. So you're just going into an institution based on a PPP loan. And for some people, it might be 20 grand, 30 grand. And you're going to have to bring over your full depository, full credit relationship. So I would personally try to focus on getting your application in with your incumbent bank, or if you have friends or COIs that could refer you another banking partner that you feel comfortable with. But definitely, at City National Bank, we tend to hold our clients' hands. That's why we shut down the faucet on the PPP last Friday to make sure that the 6,000 applications get funded within that 10. Oh, that's another thing. The government gave out an ordinance. The banks and any lender has 10 days to fund from the moment that SBA loan number is issued. So you could have an SBA loan number, but if the banks can't get you to funding within that 10-day grace period and it's calendar days, you will lose your SBA loan number.
Okay. Richard, we're getting a little bit of static. I don't know if you can turn your laptop or your phone so that the mic isn't touching the desk here. But Navi, a question here. Specifically for realtors or 1099 independent contractors, what is forgiven? Richard mentioned that ADP had, FICA and these taxes included here. What about for 1099s and realtors?
Yeah, so I probably won't get into this like super technical line by line details, but and Richard did touch on a lot of this, but let me maybe answer the question more so from the perspective of the realtor, like you mentioned, so I would say be prepared to show that within 8 weeks of receiving the funds, you've maintained the salary levels, right? And that you've used the funds for payroll. It's the same thing I kind of mentioned before. It's the mortgage interest, rent, and utilities. And then to kind of just echo what Richard said, let's say you got $10,000 from the loan proceeds. You need to make sure 75% of that you received, in order to get it all forgiven, needs to be for payroll, right? So in that example of the 10,000, 7,500 needs to be for payroll, and you could go as high as 25%. So in this example, 2,500 can be used for those non-payroll expenses that I mentioned earlier. As it relates to that payroll, issue that ADP had, yeah. So when you're self-employed and you pay those FICA taxes, there's an employer portion and an employee portion. So it's the employer portion, the portion that the business is paying, that's not allowed to be included in your payroll costs, but the employee portion can be included.
And if you had, let's say, an employee and let them go between the 15th of February and now, do you have to hire that person back for the loan to be forgiven?
I don't know those exact details, and the reason why is because typically if it's a realtor, it's typically a one-man S corporation, right? So you're not firing yourself and then hiring yourself back. I'm going off of memory here. I think you're allowed to reduce your payroll expense by a certain amount. I want to say you need to maintain it at least as of 80% of the sort of coronavirus levels.
So I'm going to read this. I'm going to read this for the rehiring. It says you have until June 30th of 2020 to restore your full-time employment and salary levels for any changes made between February 15th through April 26th. So really, you're looking at they're gonna measure your employee count within that time frame, February to April. If your employee count in January was 15, and then in February it dropped to 10, they're only gonna compensate you for the 10, right? It's got to be between February 15th and April 26th. You could rehire.
And what about the time period that borrowers or the bank is using to determine the payroll cost to calculate the loan amount? Is that 2019?
So it all depends if you're seasonal, right? There is seasonality. There's some industries that have, like restaurants, right? In South Florida, everyone knows in the winter time, October to February is like really their peak season. So if you're a new entity that was formed on or before January, like if you don't have 2 years, then they're going to constitute from January 19th to, I believe, March, right? If you're a non-seasonal business, then it's going to be calendar year, January to December. But if you're seasonal, the bank will take, at least our institution will take 12 months up to March 2020. We'll take 12 months, so March to March or February to February, to count that seasonality. But you have to run the numbers, right? You're not required due to industry type to run the seasonality numbers. It's really up to you how you present the information, as long as you have corroborating documentation to support those figures. What the bank's doing is just getting the 12 months, right? Adding all those payroll expenses that we mentioned, and then we're dividing it by 12, multiplying it times 2.5. What we're doing, we're rounding up. So either rounding up or down, it all depends where the number fits. But so like if you have a $22,000 biweekly payroll, then your loan amount would be around $50-something thousand, and then you will have 8 weeks to deploy that capital, right? The tricky part is how your payroll cycle is. I know clients were dying last week to get these loans funded, and now they're not in a hurry because they don't have a payroll till the following week. So my guess is that the government, if it's really for 75% payroll expenses, and you're not going to be able to use 75% of the loan proceeds within those 8 weeks, I'm sure they're gonna have to do something with guidance to really, give the entities the ability to use it for payroll. Or I've even heard some clients say, well, we're gonna fund up their 401k, right? Or we're gonna fund up something to benefit the client, the employees, through a payroll expense if we can't get 8 weeks of payroll.
Even if that wasn't part of the previous expense, like the last year's expense?
Retirement benefit is. So 401k contributions from the employer, so employer-based contributions are part of the expense. Remember, it's employee benefit, so paid time off. They could even do paid time off, allocate a percentage of the money for PTO. So there's a lot of things that companies are talking to their CPAs trying to do if they can't get the money deployed within the 8 weeks.
So you don't have to say, okay, I didn't give paid time off or a 401k in 2019, but I'm going to give it now. That's still an employee contribution or an employee benefit.
Technically, yes.
Okay.
I mean, it doesn't say. It's funny. It's a good question. I really don't know the answer. Maybe Nevin knows the answer, but technically, yeah, I mean, it doesn't say that if your payroll cost, your payroll cost is X, but it doesn't say that if you didn't have 401k expenses in 19, that you can't technically have them in 2020. I think you have to show documentation that you got to that number. But it doesn't really say whether you have to use the money like for like, right? It doesn't really specify, as long as 75% is payroll expenditures.
Right, I'm sure a lot of that is bank interpretation. And they're changing the rules, like we said all the time at the beginning, they're updating the guidelines here every day. So you're getting new information as you go along.
Correct.
Oh, can I just add something to that?
Yeah.
Just real quick, this is more so for your new businesses, right? I agree with everything that Richard mentioned a moment ago. So let's say you're a realtor and you weren't in business from the period of February 15th, 2019 to June 30th, 2019, then you may use the average monthly payroll costs for the period of January 1st, 2020 to February 29th, 2020. And I know I threw out a lot of dates there, and the information's on my website, but the point I'm trying to make here is, for those of you on the call that are new business or new realtors, and let's say you didn't have sales in 2019, but you started in the later half of 2019, what deals you closed in January and February of 2020 can be used to apply for PPP. So don't think that you're left out. The whole purpose of the plan of PPP is for existing businesses. So if you started business February 15th, 2020, then you're out, unfortunately. But if you started late in 2019 and closed deals in January and February, you can still apply.
Great. So they'll extrapolate that, any business before February 15th and see if they can stretch it out, as long as you have the right documentation. So my next question here is, what documentation should we prepare? I know a lot of this information is on your website, and Richard can provide some as well, but as a realtor, what documentation can we use to substantiate these?
Yeah, so, again, I don't want to repeat myself over and over, but as a realtor, I'm envisioning you're a one-person S corporation or you are a sole proprietor, right? You're taxed as a sole proprietor. And let me just clarify that, because the loan app is a little tricky in one aspect. It's actually very simple. There's one thing that's a little tricky, and it's kind of like asking you to check a box. Are you an independent contractor? Are you a sole proprietor? Are you a Schedule C? These, in my view, from a tax perspective, are all synonymous terms, and the loan amount that you qualify for is not really going to matter based on which of those boxes you check. But to answer your question, if you're that one-man S corporation, you're going to probably send in documents, and Richard could comment here, probably maybe a W-2 for yourself, a W-3, a 941. These are like all payroll tax filing forms. You may also include, what retirement contributions and health contributions you were. If you're a sole proprietor, the main number is actually going to be on one of your tax forms, and it's going to be your net profit for 2019. And on my site, it gives you the exact line item to go look for, but it's usually based on a number on your tax return. But I'm sure Richard can speak for his bank. I know for Chase, which is where I do my business, when I went through the PPP app process, there was like 8 different ways. They said, hey, you can submit any of these 8 documents to prove out your payroll costs. So don't think that, you know, you need a bunch of documents. They're being a little bit flexible. You know, the important thing, as Richard said, is get the loan app in. Let's figure out the super detailed semantics a little bit later in the forgiveness stage if your bank's giving you that flexibility.
Richard? I lost you there.
Can you repeat the question?
So what documentation, you know, he's saying 941, W2, W3, what documentation for you is the bank requiring, or is it listed on the website?
So you'll need the 941, the 940, the W2 summary. What else do we need? The W2 summary.
Now, can you hear Richard? Or is that coming through bad for you too?
Yeah, I think everyone in attendance is probably getting a little, you know, static sound when Richard's speaking, but I heard bits and pieces. So I'm just reiterating, you know, he mentioned the same sort of payroll tax documents that I touched on. I think he said W3, 940, 941, and some summary type documents, you know. And again, if you're a realtor and you're like, hey, I don't know what this is, you know, if you're paying yourself a salary like you're supposed to be, if you have an S corporation, then you're probably either doing that through a payroll company such as ADP that Richard mentioned, or your accountant does it for you manually. So reach out to your accountant. They've probably seen tons of these requests by now. They'll know exactly what documents to get for you.
Right. Yeah, I'm sure the professionals are going to have a lot of guidance here, as well as the lenders like Richard. And the idea is just to substantiate your application with the documentation. If you can prove it, it should be okay. How about for a W-2 employee, like a loan officer, a CPA whose hours or commission have decreased? What would you say is the best recourse here?
Yeah, so, you know, I mentioned that the CARES Act has a bunch of stuff built into it, right? And so, you know, what the programs we've been talking about so far, Richard and I have talked about PPP, and we'll probably talk about EIDL here a little bit, but those 2 programs are meant for employers, right? Or small businesses. So you as a realtor, you're a small business. You as an independent contractor, the IRS views you as a small business. So you can apply for those programs. If you're a, you know, what the IRS kind of calls a wage earner, you're an employee working for a big corporation, these programs are not for you, but there's other stuff in the CARES Act for you. And we really don't know a lot of the details on that stuff, but basically my understanding is that if your hours were reduced or your commissions have been decreased or you've been hurt by this, you can apply for unemployment assistance. You know, typically unemployment was not available for independent contractors. Well, for the CARES Act, you know, now it is. Reduce of hours typically not covered under unemployment. Well, for the CARES Act, now it is. So I would say, you know, you have to look at the unemployment for your state on your state's website. And, you know, I know that's a whole nother story. Florida has issues with its site. Eventually they'll figure it out, and the stuff that the federal government's saying will hopefully align with what the state is saying.
And does that go backwards? So if you are waiting to apply, or if the website is down for unemployment, or is it, you know, if you apply on the 15th, you get it from the 15th?
Yeah, I'm not an expert in the unemployment. I would say we would hope, right, that I think on the unemployment application, I believe it would say, you know, what days did this sort of impact you, and I think that they would have to sort of go back and retroactively apply it.
And is that, maybe we're getting greedy here, but is that income taxable? The forgivable income, is that taxable?
Right. So if you apply for PPP or the EIDL program, the CARES Act explicitly says that, you know, what the forgiveness amount is not taxable. As it relates to unemployment benefits, if you're an employee and you're applying for unemployment benefits, I suspect that will be taxable.
But Nevi, the income, I have a question. It's tax-free for the employer, but the employee, I'm presuming it's not. It's still going to be for the wage earner. It's still going to be taxable income. I'm pretty sure.
Yeah, that makes sense to me. The employer would receive the loan proceeds tax-free, and then as they pay their employees, the employee will pay their normal, FICA taxes that's withheld from their paycheck. And even this, again, this applies even if you're that one-man S corporation. The amount that you receive from your S corporation as a salary, you'll pay your FICA tax on those amounts.
So there's really no pro or con here. It's just as if you were paying the employee. There's no benefit, and you're not getting hurt by taking on this loan and having it forgiven by the government with additional taxes. It just is what it is.
Right, absolutely. I mean, if you're interpreting the question as, oh, this income could potentially be taxed, I'm not going to apply. I would urge you not to have that mindset, because you're going to, the chances are real estate will see a little bit of a downtick here, right? And so I want people to be able to pay for certain expenses for the next couple months until you're back out in the field doing your, instead of your virtual open house, your traditional open house, right?
Yeah, and invest in the future, invest in themselves, in education. I think that if they use this time now, it's going to be an uphill. Is that something, Richard, that you're seeing where business owners are concerned that this forgiven income is going to be taxable and they're a little hesitant to apply? You're muted. There you go.
Conferences. Okay, so on the contrary, my clients are eating this up like hotcakes. They want to, for them it's free money. As long as some industries are still operating, this is going to be bottom line income. So if you're still continuing, if your business hasn't been impacted tremendously from the COVID-19 pandemic, such as, hospitality has suffered. Anything there, hospitality, the hotel business, restaurants, anyone servicing those businesses, even food distributors or wine distributors. So supply chain management from a hospitality perspective has been completely demolished, right? But yeah. I have a landscaping company that they're still cutting grass and they're still servicing. So if they're considered an essential business, they could still qualify for this program. It's it's very ambiguous. It's not industry specific. So if you're still working and you're still collecting, maybe your AR, your accounts receivable report, it goes from 15 to 30 days to 60 to 90. But this is just an extra cash flow component in your industry, in your business, to help you, keep your clients afloat. Now, remember, guys, this is going to end in June 30th. We're in April 15th. The idea that once, we get back to work, that society is going to just accept like this never happened is kind of ignorant, right? So this will drag on for, I think, till the end of the year. And this PPP program is just one stepping stone to keep a cash flow. This was, in my opinion, and everyone in our company, we look at this as a cash flow bailout. So all of you are in real estate. The last economic crisis was really due to valuation, and the way banks were reserving on these valuations. This has nothing to do with valuations. Properties, they might go down, but they're not going to go down substantially. There's still a demand out there. But the issue that I see is that there's a cash flow issue. So, if there's no cash flow coming in, people can't live their day-to-day lives. They can't spend the way they were typically spending. And then for big companies and big finance companies like credit card companies, banks, mortgage servicers, Fannie and Freddie, they're giving concessions for you to defer a lot of these payments till either the back end of your loan, or just they're not forgiving the debt, but they're giving you deferments to help with your cash flow. So really, I think all this is going to do is supply, a certain amount of $350 billion. And there's also the stimulus package. People that report less than $75,000 are going to be getting a check from the federal government. It's all to stimulate cash flow. And I think that right now it's what's going to come first. Is this pandemic going to last longer than the cash flow stream starts, coming back into the GDP of this country, or will the cash flow sustain us through a good enough amount of time So when the economy picks up again, everything is kind of like business as usual. But I can tell you right now, the hotel business, the hospitality business, that's going to be one of the major impacted industries. People, from our portfolio, we've had a severe amount of deferments, but every single hotel that we have financed in the last 6-7 years, they've asked for a deferment. So it's very typical. Restaurants as well.
Richard,
I had one restaurant
for the hospitality industry here, if you are, let's say, a server, a waiter, or a bellhop at a hotel, and you're filing for unemployment now, does your employer giving you your paycheck now disqualify you for unemployment, or like Navi was saying, a reduced salary, you're still going to qualify under the new program?
Well, this is what I would tell you. If the restaurant, so there's a couple of things in the PPP program that we haven't mentioned on ineligible businesses. There's one called affiliation. So let's use a very common like Cheesecake Factory, right? Cheesecake Factory is a big entity. You might work for the Cheesecake Factory, let's say in Dayland and Kendall, but they also have an affiliation clause that since they have so many businesses that have common ownership, they don't qualify because the max employee headcount is 500. But if you work for a an independent, where he has 1 or 2 restaurants, all individual tax IDs, ownership is different, then those clients should be applying for the PPP. Because from a server perspective, I happen to have 3 restaurants in my portfolio that are very well known in Miami, and they've applied for the PPP. They've kept their employees on payroll, even though the income has gone from $25,000 a week to $500 a week. They're trying to keep their employees, because keep in mind, it behooves the industry and it behooves the operation, because once you go back into business, you don't want to train your staff again. You don't want to have to teach people how to operate the culture. So at the end of the day, real smart entrepreneurs and real good operators are going to try to keep their staff employed. My suggestion is for those waiters, and by the way, the PPP does include tips, wages. So, as long as the tips are not cash, the cash tips that appear in the POS that are recorded, those are counted for in the payroll expenses and the cost. But if what I would do is, if your employer is qualified for the PPP, take it, don't file unemployment. After June 15, file for unemployment. And the reason why is because, if you're qualified for the PPP, technically you're employed. So
Right, that's the point. And how are the funds being dispersed? Are you getting the money from the government and sending it out? How are you sending it to the businesses or to the independent contractors?
Well, that's a great question. There's a huge misconception here that the banks are being funded by the federal government. The only thing that this SBA program provides a bank is an SBA guarantee. So banks are actually using their capital to deploy this program. The $350 billion are coming from banks. They're not coming from the federal government. The federal government is simply guaranteeing the debt, meaning that the bank, in essence, has a fully guaranteed loan that whether you pay or you don't pay us back, or it's forgiven or it's not forgiven, the SBA will buy back 100% of the proceeds. We don't know yet if it's going to be at the time that we fund. We don't know yet if it's going to be after the forgiveness portion comes in. We really don't know, because at the end of the day, the SBA is just giving us a guarantee. And that's why that SBA loan number is that guarantee, and it absorbs that allotment. So you're looking at tax ID, the allotted funds, and the SBA loan number.
And then are you being charged, is you the lender, and are you passing along any costs? Are there any costs to me to apply to have that loan?
So that's a good question too. A lot of people don't know that Governor DeSantis basically removed the doc stamps requirement for these loans for employers. So as you know, there are doc stamps for commercial loans. Typically when it's a UCC filing, which in this case, we're not filing anything, there's no mortgage, there's no collateral per se. So the doc stamps wouldn't be tied to a real estate transaction per se. These would be capped at $2,450 because they're unsecured loans, and he's waived the doc stamps for all these loans. So in reality, we started funding. You're getting 100% of the proceeds, and the only thing is that banks are being compensated by the federal government depending on the loan size. There's an interest rate that's 1%, plus a fee for originating the transaction. So for banks, you have to look at this too. This is also a bailout for banks to a certain extent, because banks are going to generate fee income. It's going to help them with their cash flow, right? Because as people stop paying their mortgages, that's money that we have out that we have to reserve for, and we have to set aside capital, through our regulatory, requirements with the federal government from a banking standpoint. And we don't want, I don't think the government wants to start writing. It would cost the government way more money than $350 billion to bail out banks nationwide.
Right.
Due to
Right. Don't worry, we're not worried about you guys anymore. Don't worry. We just want, our free money at 1%. So
man, listen, it matters. It matters.
It does.
As we've been talking about, it's very interesting. One of the issues in last crisis, if you remember, was that banks stopped lending money. Banks stopped lending money.
This is definitely a liquidity, crisis that we're having, and we're happy that the banks are getting help here, and that's a big one. Going back, I know you mentioned, Navi, the EIDL or the EIDL. What are the pros and cons or advantages and disadvantages of PPP versus the EIDL, and which one specifically for realtors would you?
Yeah, so let me provide some perspective here. For those of the attendees on the call, I would say 95% of what we discussed, so far has been PPP, right? So the EIDL program, that you apply directly through the SBA, but for the realtors specifically and brokers really, apply for PPP first. If for some reason you don't qualify for PPP, and let me just kind of high level talk about why you wouldn't qualify. So if you're an S corporation, you're supposed to be taking a quote unquote reasonable salary per the IRS, but some of you don't. you don't take any wages out of the company, and you extract your profits from the company through distributions. So if you fall into that bucket, you're not going to be able to apply for a reasonable PPP loan amount. For those of you that are taxed as sole proprietors, and let's say you just had a bad year or you're kind of new and you just don't have any net profit from your business, so your expenses are greater than the commissions that you brought in, that will be another scenario where, if you try to apply, your payroll costs would be near nothing. So if you fall under those two buckets, then apply for the EIDL program. Again, it's directly through the SBA. It kind of scares you and said the application could take 2 hours. It actually takes you 20 minutes max. And, I would encourage you to apply for the EIDL program if you don't qualify for PPP. Now, I touched on at the beginning of the call, the situation is pretty fluid. And so we just received, we suspected this, but we just received information yesterday that kind of confirmed this from the SBA, that it's $1,000 per employee. So, if you weren't treating yourself as an employee, you might be in a little bit of trouble there, but apply, you'll get at least 1,000, and it may be treated as a grant.
Is that for the advance or for the entire loan?
The advance portion.
Okay, so that's just the advance. You could still qualify for a larger loan even if you have 1 or 2 employees.
Correct. Yep, that is 100% correct. Again, when I answer the question, it's more so I'm thinking from your average 1-man, 2-man, real estate team or business or group. And so if you're like a traditional business, more so like what Richard clients are, then yeah, if you need funds to just pay for the operating costs of your business, then apply for EIDL. Don't worry about the advance. You're more, the 10,000 is a drop in a bucket for some of these larger institutions. And so, you're going to apply for a dollar amount much larger than the 10K advance.
Right. So you wouldn't say one is better than the other. It just depends on your specific situation.
Yeah. If I ask the question from the perspective of the average realtor, I would say PPP is better. Apply for that. If you don't qualify for those 2 reasons I mentioned earlier, then apply for EIDL.
And if does applying for both contradict? Does it offset or does it roll over?
So you can apply for both, but you're not supposed to use the funds for the same purpose. So if you apply for PPP, right, we talked about what you need to use those funds for. It's heavily weighted on payroll cost. and then you get the $1,000 EIDL or whatever amount you receive for your advance for the EIDL program, you can't say that, oh, I also use that amount for payroll costs. It would have to be something else to help your business operate. I received guidance from the SBA yesterday. They sent out an email. They kind of were comparing the two programs, and the EIDL language has become, I don't know, fuzzy, if you will. And now it kind of says the loan proceeds can be used for just operating costs to get your business through this hump, if you will. Whereas the PPP, it's more so payroll driven.
And is there a difference on where we would go to apply for the PPP versus the EIDL loan?
Yes. So as Richard mentioned, you know, wherever you have your business banking relationship now, I would say try to apply there. Now, there are situations where you might bank with a smaller bank or a bank not typically involved with the SBA. And so, you know, like Richard mentioned earlier, you know, people were trying to apply at Chase or Wells. The program wasn't available just yet, or they had to sort of turn the faucet off, as Richard said. And so his bank was able to step up to the plate and offer those loans. So, you know, research your community banks if your bank is not participating in the program, and apply for PPP at your bank. For EIDL, EIDL, that you don't, it's not fully facilitated through the bank. You're gonna apply directly through the SBA.gov website. And it's kind of funny, like, as you do that loan application, they're asking you for your routing number and your checking account number. And so they're going to fund you directly, not through the bank.
Yeah, no, definitely. I think support local, support community banks. We appreciate, you know, City National here doing their part and stepping up. I know a lot of us are real estate investors, not necessarily realtors, but real estate investment properties. And how would that qualify for the loan or forgiveness?
Okay, well, if I may take this one, real estate investment companies, holding companies, and developers are not eligible businesses. So there is a list of ineligible businesses, and I think it's very important that before you contact a bank or try to, you know, make your case, because it does get annoying. I'm not going to lie. Clients try to tell me that, you know, they're eligible, and we don't set the rules. There's an SOP document. It's about 300 and some odd pages, and it's basically the guidance from the SBA related to what's eligible and what's ineligible. Ineligible business, so real estate holding companies, developers of residential property, contractor, finance company, life insurance companies. There's a long list, non-for-profit organizations, excluding 501c3 and religious organizations, are all ineligible businesses. So if they typically couldn't get an SBA loan prior to the PPP, they're not going to get an SBA loan now. So that's the first component, and you know, it's not hard to figure it out. But if you do have, if you're kind of in that area where you really don't know, then you know, I could share my email and I could provide you with information if you need it. But overall, for example, hard equity lenders, hard money lenders, if 100% of their entity is used for hard equity lending, they're going to be ineligible. But if they do 25% of their business is hard equity lending, then they could be eligible. But so it really all depends, you know, how you present the information. But when we were talking about the NAICS code, that's how the SBA is gonna determine that guarantee from the bank. It's the bank's responsibility to make sure that even though the information is being attested by the applicant and they're affirming that all the information is correct, the banks are still responsible to do their due diligence and to confirm that the information being presented, in fact, creates an eligibility component with the SBA. If not, then the banks are going to have to get up with this facility.
Trust but verify. Navi, what about necessarily not a developer or a big builder? What about the individual who has one or two investment properties and maybe they're missing out on some rental income?
Yeah, so Richard, let me just ask you a question first, and then I'll answer that question, Brian. Richard, what you just stated was from the perspective of the PPP program. Is that correct?
Correct. I'm only talking PPP here.
Okay. So I just wanted to clarify for the participants. So, you know, honestly, up until yesterday, the thought process was for the EIDL program that if you were a investment, you know, real estate investment property owner, and you have a tenant in there, I was telling folks to apply for EIDL, and I think you still should. How my answer changes between yesterday and today is that the loan advance, I don't see you getting funded, you, the real estate investor, getting funded for the advance portion of the EIDL program, because you're not, typically if you're an investment property, you're not an employee of that business. You could try, and if you get, the worst case scenario is you try, you apply, you get the advance, the SBA gives you a call, and they're like, oh no, this is not going to be forgiven, and you just give them the money back, right? And so you're probably going to be fine. I could see though how, remember this program, the EIDL, Emergency Injury Disaster Loan, this program has been out there for years. This is not specific to coronavirus. They're changing it a little bit, but let's think about here in South Florida how we have hurricanes, right? This program was to help those businesses where an emergency took place. And so if you're a real estate investor and, due to the coronavirus, pandemic, your tenants can't pay your rent expense, their mortgage, and you're gonna be injured because you cannot pay your mortgage as a result of your tenant not being able to pay their rent payments, then perhaps you apply and it could qualify for maybe a little bit of forgiveness. Or if not, let's not forget that just because it doesn't qualify for forgiveness, that the rate is probably not the best rate you'll ever get for a loan in your lifetime.
They're aggressive loans, and they're pretty good. And I just want to clarify and reiterate what you're saying is here. The EIDL is the EIDL. It's an emergency disaster loan, and that's been expanded now under COVID-19. And the PPP is payroll protection. So those are two different programs. I highly suggest that all of our attendees and our guests and our members go to your website, NaviMirageSheets.com. There's a wealth of information there, and I suggest that they go and read up on that, because I think there's a lot of information, and they could follow up with you directly. We'll put your information and Richard's information out there, and we're going to continue to do these webinars. So I want to thank you, Navi. I want to thank Richard, City National. Thank you to Good Greek, our sponsors, and thank you to all the members and attendees. Thank you so much.
Thank you.
Thank you, guys. Have a great day and wash your hands.
Thank you, Richard. Thank you, Navi.
Thank you, Brian. Thanks, everyone, for joining.
We appreciate it. And we'll send out more information for the future seminars and webinars that we'll be doing. Stay safe.